you have to focus on cash flow, value appreciation, equity growth, and then especially in what we've seen over the last couple of years is you have to look at asset classes that combat both inflation and taxes. And so it's rare you're going to find that in any single asset class. You don't find it in precious metals. You don't find it in traditional public market investing. You don't find it in bonds. You don't find it in those types of securities. You can find it in real estate. So real estate really is unique, not only because of the market cycle that we're in, where we've seen historic high interest rates, which has created a lot of value creation and value opportunities in the form of discounted loan payoffs. But the flip side of that is you also have historically had record high equity markets over the past couple of years. So you've really got this perfect storm of record high equity markets, which we've already seen some corrections occurring there. You've got record values being provided in the real estate market, and then you tie that in and build that in with the tax benefits and the inflation combating benefits that you receive in real estate with cash flow. All of those together really create kind of this perfect storm that you don't really see in any other type of asset class currently in this market.
Ty, anything to add there?
Yeah, no, I mean, I think you know when we have market cycles like what we're seeing right now, you're really seeing that inverse relationship with a physical asset versus a stock bond or mutual fund. And I think that's the whole goal around diversification. And we've talked about it before. Diversification is not five different stocks in the stock market. It's different asset classes, and really focusing on asset classes that are counter correlated to the equities market, so that when you have a market shift in any type of asset, you're gonna have some. You may have, like we have distressed real estate right now. Well, it creates a buying opportunity, but if you bought 3 years ago, it creates a waiting opportunity, and vice versa with the equities market. We're setting at all time highs. Well, it's a selling market, so you've been holding. It's time to step out and reallocate, because we're going to end up having a swap of that, where the equities market resets and real estate starts to pick back up again. And so we're seeing that right now play out as we speak.
So
Ty, I would tie in a little bit more on the diversification because if you are a public markets investor, and we've talked about this in prior episodes, you tend to look at diversification in what's called the style box. And the style box for public markets is a simple way of saying you've got large cap companies, mid cap companies, small cap companies, and then those can vary between value, blended, and then growth oriented. The reality is all of those are still public equities and all of those are still stock market type investments, whether it's a large company like NVIDIA or whether it's a small publicly traded company um, that we see in some of the more local markets. But all of those are really another interpretation of a public market equity. And you're right, true diversification really takes out one of the asset classes that is talked about more and more, especially among private family offices and high net worth investors, and that is real estate. And so it's something you're starting to see more and more in, I'll say, traditional style boxes, adding real estate as kind of that asset class. That's a much bigger focus moving forward.